Phil Streible joins us. The chief market strategist is with us this morning. From Blue Line Futures to, well, take a look at commodities and get ahead of the Fed. Phil, welcome. Let's begin with the FOMC announcement this afternoon. The expectations that we'll hear Powell speed up the pace of the taper. You can understand why when you look at some of the data we've received recently.
Yeah, I think that the hawkishness is really built into this one. Although the way investors are positioned is they expect things to just be, business as usual. I don't think they're actually taking into consideration that 15 billion taper for the first couple months, speeding it up to 30, and then the potential for 2 to 3 rate hikes next year. I think it's going to get pretty aggressive. So, a lot of these markets, though, I really believe factor that in, like gold, silver, dollar, bonds, everything else. The yield curve's been pretty flat here. So, it's going to be interesting. I think that the press conference after is where people are going to really try and get the gauge of the tone on how aggressive they're going to be.
Phil, what are we looking at in terms of the indices? Have they factored that in? Have they looked past the risk as they have in so many other instances, whether you're talking U.S.-China trade concerns, some of the geopolitical concerns that have risen, certainly inflation, or are they just oblivious to this Fed's kind of new phase that they've entered into?
Well, it's been really volatile. That VIX spiking, and once you go over on some of these volatility and actually get into the high 20s and 30s, you start to see, these huge ranges. The Omicron, that's been one of the biggest, factors out there, and it seems like more countries are continuing to lock down. You got more countries are being more and more dovish, too, with their policy statements. So I feel like everyone is moving into the U.S. You got me scratching my head on this Russell chart, looking if it breaks through that 2085 to the downside. It looks like it could be toast. So, but every dip you needed to buy on it, and you got paid, so it's really kind of a cautious tail there. It might justify a, something like a straddle as far as an option strategy.
Let's talk a little bit about commodities, and I've got one. Speaking of the Russell, this looks a lot like that chart now that I think of it. Copper has come off. Now, not to the same extent that we've seen silver coming off, but I keep wondering if copper's now got a little bit of room to play catch up here. Silver, industrial metals basically have been signaling there's cause for concern here for a while, Phil.
Yeah, the copper's down 1.5% right now, so that doesn't look so great. Copper and silver, are often interconnected, and silver has just been terrible. Last 22 days, it's only been up 6 days, and those gains have been pretty small. So, every time I call somebody, though, and ask them if they want to buy any silver futures, they're jumping all over it. The problem is that you had the producers, they were aggressively selling because they're worried about another outbreak on Omicron or Cron or, whatever else is going to impact demand.
Just quickly want to pull up this recent move lower in silver. We took out the $22 level to begin the week, all the way down to $21.67. And you can see, again, this is just the last couple weeks worth of declines from 23. But as we take a step back from this 30-minute time frame, look at, as Phil mentioned, how we've worked our way back down to some key levels here in terms of silver. Still holding up above that September low, but should we get below that, we're talking levels we haven't seen since July of 2020. So again, copper has been strong relative to. How about crude oil? Because we're seeing some selling there. Inventory is a small draw, probably not a major focal point. I saw the IEA report this week. What are you looking at in terms of WTI back down below 70?
It's really like two different tales. You've got, if you just looked at the EIA data, you'd be saying, hey, this thing's got to be going way higher. The yearly change, we draw down 70 million barrels. We're sitting at 432 versus the 5-year average of 463. I read a report this morning that talked about the imports, crude oil imports are going to post their first annual decline for Chinese imports. So if China's slowing down and they're not importing crude oil, that's going to be a big problem. So oil prices might work their way back down to $65.
Well, I guess that was my next question in terms of demand. We oftentimes look to China. Is that, it sounds like it is where we're seeing that piece of the puzzle kind of missing at this point.
Yeah, it's the demand structure. So you've got the Biden administration, they're doing whatever they can as far as selling off the SPR. You've got OPEC, they're trying to boost production. However, I don't think that they have the spare capacity to do it. So I think they're all bark, no bite. But that China slowdown, that's a bit worrisome, and especially if these countries start doing lockdowns and things like that, that could be a big problem.
Phil, we've seen natural gas prices here in the U.S. come off sharply. I think it's supposed to be 55, 60, maybe record high temperature here in Chicago. So warmer temperatures here in the Midwest. But I'm reading about Dutch natural gas and how basically in Europe they are not seeing price pressures relief to the same extent that we're seeing here.
No, and all the natural gas, most of it flows out of Russia into different parts of Europe. So I think that they're really keeping things tight. Natural gas prices up about 4.5% this morning. So really kind of interesting as far as, can prices recover? But that the weather situation doesn't look to be too bullish on natural gas at all.
Phil, talk to me in terms of focal points here. This could be the last time we have you on the show before the end of the year, into the holidays. If so, first of all, we wish you the best. But talk to me in terms of what you're going to be watching as we head into the end of the year, the last couple of weeks, and then as we embark in the month of January and begin 2022.
So, it's been an incredible year for U.S. equities. Something that we are concerned about is that if you do have money managers that are extremely profitable, double-digit growth in portfolios, and equities start to sell off, it could be a race for the exits. So that's something we're watching. Also, the Fed is going to be tightening into an economic slowdown, could cause some deflationary or disinflation in that first part of the year. So I think it's going to be a little bit tougher next year, and I think that the S&P might only average about an 8% gain.
All right, I like it. You're going to have something to keep an eye on in terms of the bigger picture, and a good breakdown as far as some of the more front and center focal points here that investors and traders are going to be keeping an eye on. Phil Streible, always appreciate you joining us, and especially on a very busy Fed Wednesday. Phil's the Chief Market Strategist at Blue Line Futures.